BDC Weekly Review, PIK is at record high. This article was written by ADS Analytics. Summary: we take a look at the action in business development companies through the third week of October and highlight some of the key themes we are watching. BDCs had a strong week, rising over 1%, supported by reduced expectations of rate cuts. The rise in payment in kind, PIK income, now at 7.5%, raises concerns about potential credit issues, though not all PIK is distress-related. Upcoming lockup expiries for NCDL, OBD, and MSDL may cause price drops, but these are expected to be modest due to current valuations. Blackstone Secured Lending's new $400 million bond issuance at 5.35% is manageable in the context of their investment income above 11%. This update covers the period through the third week of October. Market action. BDCs had a good week, rising over 1% and outperforming most other income sectors. The fact that the market has shaved off one expected rate cut this year is supporting the sector. Month to date, BDCs are up nearly 2%. The average valuation in our coverage has been creeping up lately, though it still stands below the pre-August drawdown level. Market themes. There was a recent FT article about the rise in PIK in the BDC space. The key data point is that PK has been rising and is now the highest since 2020, at around 7.5% on average, having risen from around 5% in the last 4 years. The highest level of PIK is the Blue Owl's private tech fund at 24%, with Prospect Capital, PSEC, second at 19%. The article equates the level of PIK with distress and worries about potential credit issues to come. The second point it makes is that because PIK is not cash, its existence could create a liquidity crunch for companies, as BDCs need to pay out at least 90% of income, which includes both PIK and cash income. The key point here, which the article to its credit makes a hand-waving gesture at the end, is that not all PIK is a sign of distress. For example, 90% of Ares and Blue Owl PIK was structured as PK from the start. Sometimes borrowers like having cash on hand for making capital investments, and that can be perfectly acceptable to the lender as well. The liquidity crunch issue is also mostly a non-issue, given the high level of retained income most BDCs generate at this point, and the fact that they can easily borrow from credit facilities to make payments. A huge PIK level like the one PSEC has is a cause for concern. However, a single-digit PIK level is not a big deal. A final small point is that because PIK compounds, loan principal and repayments increase each quarter, which could create a potential issue if the loan stays as PIK for a long while. For example, after a couple of years, the loan principal could increase by a quarter, which creates a greater debt for the borrower and a larger potential loss for the lender. Obviously, both parties are not blind to this issue, so extending and pretending is not going to work for a long time. A distressed loan is not going to stay as PIK forever. At some point, it will simply be moved to non-accrual. Market commentary. Lockup expiries are coming up for 3 BDCs next week, NCDL and MSDL, on the 21 to October. This is not the first lockup expiry, so the price drops, if they happen, are unlikely to be as big as the first one. MSDL had a double-digit drop on its first lockup expiry, though the fact that it was trading at a high premium did not help things. This time around, valuations are more modest. All 3 BDCs are trading at a discount, with OBE arguably offering the best value, particularly given its upcoming merger with OBDC, which is trading at a significantly tighter discount. Blackstone Secured Lending, BXSL, is issuing a $400 million 5.35% 2020-28 bond. The company has done well managing through the high interest rate period. Its highest coupon bond is the 5.875% 2027 one, which was issued in May 24th, after longer-term rates already fell quite a bit from higher levels in 2023. Although the new bond will raise the weighted average level of their interest expense, that's a modest coupon to pay in the context of investment income that is still running above 11%. BDC prices have risen slightly since the Fed's first rate cuts. This confirms our expectation as well as previous periods of lower short-term rates. Early indications are that credit quality has remained strong in Q3, so a high level of retained income is likely to push the average NAV higher over the reporting period, which could then drag prices higher along with it. This article was written by ADS Analytics.